Well, hello everyone. Welcome to Trading a Smaller Account. It is Friday. Has everybody else felt like this has been a long week? I know it's been a very bullish week, but all I can say is I am grateful it's Friday as much as I love meeting with all of you. We have a lot to cover in our 45 minutes today, as we always do. So this is no surprise. And if there's one thing I am guilty of on occasion, it's like of trying to fit 10 pounds worth of information or 10 pounds worth of stuff into a 5 pound bag. I hate to tell you, I haven't gotten over that. That is still going to be the case today. But today we're going to look at two trades that have hit targets. So it's brought to you by the numbers 2, 1, 3, and 3, because we're going to look at two trades that have hit targets. We're going to do a vote on one trade that needs some kind of action. And I like to run a semi-democratic class. And so we're going to do a vote on the one. We're going to look at three trades that when I looked at them before, I looked at them and they looked delicious, but then, maybe they had too wide a bid-ask spread or whatever. So we're going to look at, because I get asked all the time, like, how do you choose the examples that you actually choose to trade? And why do you choose those? And so often I go through a list where it's like, looks great, no, or we need a setup, so no, or, so we're going to go through a little bit of that. And then we're going to place at least three new trades. Okay. And so we're going to go over some trades. We're not going to go over all of them. AMD and NVIDIA are two that I was planning on waiting to discuss on Monday. And yes, I'm wearing green, mainly because it was pretty cool in my house today. We actually got snow yesterday. I said, the gods are taunting me because, getting snow in the middle of April, once a lot of the resorts around here have closed, is a little bittersweet. We've got Scott Thompson with us in the chat today. You guys all know that I love Scott. I've learned a ton from him. He's a friend, a fellow coach, and a manager on our team. And he understands everything that we're talking about today, inside and out. So if you've got questions, please don't hesitate to ask. And also follow us on both X and LinkedIn. Okay. Yeah. So follow us on X at Barb Armstrong CS, at Scott Thompson CS. And we do trade a lot of options in this class. We do a ton of examples in this class. It's a very active trading class. So keep in mind that everything that we discuss in this class is for example purposes only, none of it to be construed as a recommendation or personal, investment advice. Also know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and hone your skills. Okay, so we're going to do a super fast market overview on Fridays. Mr. James Boyd was regaling everybody today. The focus was on ETFs. He does an incredible job, but you have to be there live. It is one of the most widely attended events on a weekly basis because they do such a fantastic job. If you're not there Friday mornings, you should be. Consider adding it to your rotation if you can. So we'll have a quick look at what's going on in the markets. We'll do a bit of trade management and then focus the rest of our time on new trades. If you have never been to a live event, so if you're in Boston right now, you're obviously not listening to me live. Maybe you'll watch the recording. The next event, they'll have a couple of well-deserved weeks off, and then we're going to do our market drive in Chicago. It's a one-day event, and these are free to attend, but man, they fill up fast. So we're going to be in Chicago and then San Diego. Then there's one in Santa Clara. They've already closed the registration for that officially. They might have room for a few more. You can come and register on site. But Santa Clara is always such a popular location. That venue fills up very, very fast. So, and we'll have the coffee on for you in the morning at all of these events. We'll provide lunch. We'll pay for your parking. In Chicago, they even have a great reception at the end of the day. You get to meet some of your coaches that you see on these webcasts day to day. So, and they're free to attend. So I hope you'll consider adding that to your portfolio of ways to learn. Okay. Now, if you have not been to this class before, please type a greeting into the chat so that we can welcome you to this community. We have a lot of usual, what I call the usual suspects here today, who come to this class every Monday and every Friday. We link arms at high noon and we're figuring this out together. So to Josh and Riceberg and Sharon and James and Janelle and the rest of the gang, thank you all for being here and for making this a class full of so much positive energy. We really, really appreciate that. Okay, so like I said, I'm always trying to cram a lot in. So let's come and have a quick look. So the S&P 500 hitting a new all-time high today after, an angsty, month or so where, we officially came into, pullback or correction territory on the like on all the major indices actually. We're now hitting a new all-time high today. So it's pretty hard to say that things are anything other than bullish. When we look at the NASDAQ, new all-time high today. So if you're a bear, you are on the struggle bus. Yeah, you are on the struggle bus. Yeah, somebody said come to Florida. We do events in Florida, typically Orlando and Miami. So if you look at the schedule, go to schwab.com/coaching and look at live events. I know that we'll be back in Florida this year. So the Russell, new all-time high today. Does this sound like I'm a bit of a broken record? Now the Dow. Yeah, we weren't 4 for 4. We're 3 for 4, but the Dow's up over 2% today, gapped up on the open, and it's just kept on a running. So, a lot of, happy bulls today. And if you have a lot of longer term investments, that's, you're probably smiling. And the VIX now down below 20. We're at 1740. And like 2 weeks ago, we were up over 30. It's like, whew. It's been a time. Cecil saying, yeah, the bears just got their petunias frosted. Yes, and I got my petunias frosted because it snowed here yesterday. There's been a frost warning in effect. So petunias getting frosted, all over the place. And then if we look at the indices, and I'm going to come to, my standard watch list here, the sector indices. And if you're new to this class and you haven't seen me customize this, if you go to the trade management mini sessions, there's a quick video. It's under 10 minutes on how to customize a watch list. So in the last 4 weeks, technology rotating back into favor. Consumer, look at that, like holy smokes, Batman. Consumer discretionary skipping up the hill. Financials, diagonal resistance breakout. So in the last month has been really great for these 4 sectors, material in 4th place, and communications coming out of a slump. So all of these looking pretty good, and energy now officially, in last place after being in 1st place. And over the last 3 months, still leading the pack because it had such an extraordinary run to the upside. And real estate hitting a new high today. So, there's a lot of sunshine going on. Okay, and why do we look at sectors? Well, if you're wondering where to start, you might say, okay, well, what's been the leading sector? Tech, it seems to be rotating back into sector. Maybe what I'll do is, start with looking at some tech stocks. Well, what we're going to start with looking at is a little stock called Fly. So when we look at Fly on Monday, and this is the first time we've talked about this stock, let's back it up and look out 9 months. So, it was on the struggle bus. Now you can see here that this stock, when we come back, it looks like it was introduced. Let me do a 1-year chart. So this thing IPO'd back on August 7th. So this is why our 100-day moving average is so short, because it's only had 100 days worth of information, since the end of the year. But we had this big double bottom pattern set up and then it broke out. If you're not familiar with Firefly Auto Aerospace, if you come to the Analyze tab, we can see it's in the industrial sector, which has been in the top 4 in the last 3 months. We don't have a lot of analysts reports on this, but if you wanted more detail, you could, check it out here. But what we did is we bought some shares of stock. Oh, let me just come back out. We bought some shares of stock. Our stop loss is here. Our target is here. And today we're getting this candle pattern. At support, we'd call this an inverted hammer. But at resistance, it kind of means the same thing. Things could be changing. This uptrend could be, changing into a bit of a pullback. And we call this a shooting star. So here's our question, my question. Do we stay in this trade? Because we are up $671. And as you know, I like to use baseball analogies. This doesn't quite beat like Max Muncy's 3 home runs for the LA Dodgers in a game last week, but it's at least a triple, I would say, because our goal in this class is to make $100 to $200 a week. We kind of made up a goal for the year, and our goal was to, on average, earn $100 a week over the course of the year, and we kind of hit that, like, because we started at 25,000. So now our goal is to make 200 a week, and what the market giveth, the market can taketh away. But we just made up a goal, and so $686 is a big win. And so so Oda is preempting my line. We're going to do a little poll, and it's do we exit this position? And as you guys are voting, so do we take the money and run, or do we wait? And I'm just going to say, do we take the money and run? And if we come back to the chart, here's our target at 49. This morning it hit 46.28. Our stop is way down here. So if we decide to be patient, and say, well, it could be like this. Like, we got in here, it pulled back for one day and then took off. It came up. We had a similar type of candle, pulled back for 2 days and then moved up. We could also, if we wanted more information, come over here and look at, what are people saying about this stock in the industry. We could click on and read an article. But if we're just looking at the technicals and we want to make this decision, if we decide to stay, we could move the stop up to, say, 1% below the bottom of today's candle, and that would be 43.14. So we'd be risking maybe giving $100 and some back, which would still be a very profitable trade. So we could raise the stop, okay, or we can just take the money. Now, we did have 2 stocks that hit targets. One hit a target, one hit an exit. So one was Apple. And this was another trade that we placed actually last Friday, the 10th. And we said, hey, it's still trading within this pennant pattern, but it looks like it's moving up. And the expectation is it might come up to this diagonal resistance line, and let's put our target there. And it hit that target today. And so we're now out. And we'll look at Apple again Monday, because, this is a breakout, but it could be a fake out. It could come back down in here. Or, we could get confirmation that this old resistance is becoming new support. But for today, if we look at Apple, we got in for 490. When it hit our target, we were out for 725. And so on Apple, we made $2.33 a share. We did 1 contract. Why only 1? Because we don't want to risk more than $500 on a trade. So if we take the 233 we earned less the transaction fee, and we divide that by the $490 we were risking, our return on risk on that was 48%. And, so that's, what we call a base hit. It's Barb's base hit brigades on Friday. So that one worked out. Okay, so the other one didn't hit a target, it hit an exit, and that was Dow. So with Dow, we bought shares of stock, And we put this trade on last Friday. And on Monday, it moved up. It was going swimmingly according to plan, came back, hit the 30-day moving average, which has been acting as a support level. So, no big whoop, and bouncing, going according to plan. And then today, like, what in the Sam Hill is going on? Like, I didn't get a chance to read the news on Dow, but all of a sudden, Dow took a dive and it hit our stop. And so we were stopped out. And it came back down to this support level. So if we were trying to be, give it more room, maybe we could have had our stop here. But what I would say about this trade is, if we go back and look at it as we are now doing, was this, was this entry a legitimate entry? Yes. Was our target a legitimate target? Yes. Like, if I were to look at this again, would I go, oh, I missed this obvious thing? I guess my only question to myself is, my stop, I would have put it 3% below that 35.75. 35.75 times 0.97, 34.67. Yet our stop was at 35.03. So I'm not quite sure why I made that the stop, because if it was at 34.67, we would still be in the trade. We would be down, but we'd still be in the trade. Okay, but we got stopped out. So we are going to come to the monitor tab. We're going to look at Dow. And so we got in for 38.83. We were stopped out at 35.03. And I thought, well, this might be an example of where it skipped our stop, but we got out basically at the price we requested. That doesn't always happen. And so with Dow, we were down $3.80 a share. Oops, let me shake my Etch-a-Sketch. Down 380. And we bought 125 shares. Now, there's no transaction fee on this because it was a stock trade, but we ended up down 475. Now, it could keep falling, but my only reason I'm doing this and not a happy face, because sometimes you place a trade and not all trades make money. We know that, which is why position sizing is so important. But I'm questioning, like, on what basis I placed my stop. I may have made a mathematical error, and it could have been good that we got out at 35.03, because if it goes down again on Monday, then we could end up, we could have ended up losing more. But if it bounces, then we'll, petunias frosted, as we like to say, right? Okay. Yeah, so somebody asked about NVIDIA, and this is one where we put a trade on I think on Monday here, and then it's continued to go up. So, and the plan was to leg in to an iron condor. And so this is slightly in the money now, but we're going to wait and see if that pulls back. So we're just trying to be patient on that one. And AMD is the same. So, we've had this big double bottom pattern. We were looking at, it could break out and keep going. If it pulls back, we may just exit that trade. Because if it pulls back and bounces, that's, it's now a bullish trend, and we did a short call vertical on this, but we're only one day above a second day where it's looking like it's pulling back. It could end up not being a breakout. It could be a fake out. Now, AMD is a pretty strong company. It could be that it's just breaking out, and then we'll close that trade. Okay, so let's go on and look at some new positions. So one of the ones I looked at today was Workday. And Workday, there's been a lot of bullishness going on, but Workday is continuing to fall. And so could we do something like a long put vertical on Workday? But when I came and I looked at the bid-ask spreads, they were really wide. And it's interesting because now, they've really tightened up a lot. But, we could, do, yeah, this was going to be one of the trades we decided not to place. But, we could buy the 125. It's already almost halfway there. And we want it to go below 120 in the next 30 days. Okay, so if we look at that and we say, well, are we getting enough? If it's 240, if we want a 50% gain, we get out at 360. And you might say, but we could make over 100% return. Well, one of our, we say we have a lot of expressions in this class. One is don't be greedy. If we could make a 50% return in 30 days, like, isn't that enough? We don't need to make over 100% return. Besides which, to make 100% return, we'd have to stay in like till the bitter end pretty much. And so what we're doing here is saying, okay, if this is 245, when it gets to 360, well, 245 times 1.5, we're going to take the money. So 365, we're going to take the money and run. And then if it goes, to the point where we're down 50%, it's only worth $1.20 or $1.25, then we're going to lick our wounds and exit the position. So we're going to do 2 of these. We're going to right click and create an opposite order and make this 365. Oh, that was a comma. System's picky about that stuff. It doesn't say, oh, we know what she meant. They went, yeah, no, that makes no sense. So the most we can lose, 490. So that's honoring that rule. Yes, I like James's quote, pigs get fat, hogs get slaughtered. Yeah, so, and most people, like, I had a dinner party on Wednesday night. If I had said, I suggested that people get out with a mere 50% return in 30 days, like, people would be throwing rolls at me and asking if I was, running some kind of like illegal organization, right? This is a long put vertical. And I mean, one reason that some people might not take this trade, even though it goes with the trend of the stock, the market itself has been really bullish. Doesn't mean every stock is going to follow that bullish trend, and this one appears to be marching to its own drummer, but it is counter trend to what is currently going on in the market. Okay, so let's look at something that's kind of going with the trend. So we're going to look at FDX. So FDX has been uptrending. This is just a 6-month chart, but year to date, this thing is up almost 35%. We had, it pulled back along with the rest of the market, and we had a bit of a pennant pattern. Yesterday, it broke out. Today, it's continuing to the upside. So could we assume that this might continue to move bullishly? But could we do it in a really modest way? And what do I mean by that? What I mean by that is if we come to the trade tab, instead of doing like 390 and 400, which is more bullish, right? Because now the stock has to get to 400 for us to have our max gain. What if I did 380 and 390? Like, would there be enough room for us to make enough profit? And, does it trade over 1 million shares a day? Well, this is a, $600 stock. But if we look at yesterday, it was 1.6 million. So we're still pretty early in the day. So could we come here and buy the 380, sell the 390? It only has to go up by 50 cents, well, 48.5 cents, and then stay there for us to have a successful trade. It's at 573, so 573 times 1.5. We want to get 859. So if we say, okay, 859, we're leaving, $140 of potential profit on the table, but are we okay with that? you know, yeah. Yeah, and somebody's saying like FDX's trigger day was yesterday, and yes, but no. And so why do I say that? You know, and it just depends on how aggressive you want to be. And we're going to talk about this because yesterday we had a bullish engulfing, which does not require confirmation. That is a bullish pattern. We've seen this bit of an uptrend, but we did have this kind of pennant pattern setting up. And some might argue, well, is that really a breakout or a fake out? Like today, it could have come back below. But if you'd placed this trade yesterday, you would have got in for less and you would have already made some money. You know, but we also didn't meet yesterday, so there is that. So I got to stop talking because every time I look at this, it goes up, right? So single order, first trigger sequence. We're going to leave this at, I don't want to make this $9 because that's just a little too close to max gain. So we're going to make this 860. So it's going to be a little less than 50%, but we're okay with that. And actually, now at 600, that's, you know, that's more risk than we typically like to take. Like that's at the very tippy top. We typically don't like to go above 550, and we could lose all of this, you know. So I shouldn't have talked so long about this trade. So, oh, sorry, I said I was going to make that 860. 860. Good till canceled. We're just doing one because we're risking $595 here, which is like, yeah, that's high for us. Okay, so long call vertical. So we've done a long put vertical. We've done a long call vertical. Check, check. So let's go over and have a gander at Costco. And actually, just before we do that, because James and I have been having a little chat here. So when we look at this, because this was one of my examples of trades we're not taking. So I look at this and I think, well, this looks kind of delicious because we have this uptrending stock. It's been consolidating. Again, some might want to draw a little bit of a pennant pattern here. And today it's bouncing, but we have a hammer pattern. It is not a harami, like today's body is not inside yesterday's body. So, because that candle pattern doesn't require confirmation, we have a hammer at a support level. But if you go back to my getting started with technical analysis, or you go to the trade management mini sessions and you look at the short video on this pattern, it says, if you're really following the rules, the guideline is that you wait for confirmation and see if it trades above. So we're going to be a little rule followers, you know, like, and women tend to be more rule followers in many things in life. Trading is one of them. And that's why women tend to be successful. And maybe that's why I talk about having a plan and following your plan so much. But on this one, we're going to wait. And if you're wondering, like, where does she get this like trade management mini session stuff from? Well, if you come over, if you're new, especially if you haven't already subscribed to the Trader Talks channel from Schwab Coaching, you're definitely going to want to do that. When you come to trading a smaller account and you scroll down, I've got this mini session playlist. And so if you come in, so far there are 13. There's probably going to be 18 or 20 by the time I'm done. But the very first one is what is a hammer? So hammer time for sure. You know, it's 5 minutes, and you know, it kind of goes over the rules, what that candle pattern explains. And so you're welcome to do some binge learning or binge watching. Sorry, guys. And we're about to do a short put vertical trade, but there's an example trading plan for those of you who like recipes or who like trading plans. You know, here's a framework and an example trading plan that you can use as a model to create your own trading plan. You know, so there's one for long put verticals. There's one for, did my long call vertical one just go away? There will be one for long call verticals. It just dropped off this week, so I will record a new one next week. So stay tuned for that. And then there's one for short put verticals as well. And we're about to do a short put vertical. So if you're looking for a trading plan, here's a place that you can come and see those. Okay. And then if you're new to this class and you want to see how to customize the charts or a watch list, or, you know, there's a bunch of short Thinkorswim videos at the bottom. Okay, so back to our regular programming. I promised we'd go look at Costco, and then we're going to go and close out our trade on, let me just be able to watch the time. Now, could you place a trade on J&J today, like do a short put vertical? We could. And might it work out? It might. But if we're following the guidelines, you know, in technical analysis, it might suggest that we wait. So we'll look at J&J again on Monday. Now with Costco, you know, it's up almost 15% year to date. Anybody else a Costco shopper, or is it just me keeping the company afloat? Yeah. So with this, you know, it's been uptrending, and we've got this diagonal support line. It's kind of been trading in a range, right? Well, sorry, I meant to duplicate that. So if you wanted to buy stock and put a target on it, you might say, well, I'm going to buy some shares, and when it gets up here, I'll sell them. You know, and we could do that too. We've got 15,000 in cash sitting there doing nothing for us. But could we do a short put vertical and come back here? The low on this day was 966. So could we come back and sell, say, the 970, you know, and do a short put vertical? We can't afford to do a short put because that's out of our snack bracket, but we have 330 contracts here. We've got an acceptable bid-ask spread. It's a heavily traded stock. So, or we could do maybe even the 965. Oh, I had 960 in my notes. I'm getting more aggressive as the day goes on. Let's see. Let's look at the 960 would be nice if we can get enough premium. So we get $1.20 on that. We're going to be in this for 28 days. And our kind of rule of thumb, like if you look at that example trading plan, is to say I'm risking 390 to make $1.10. And I want to make at least a 1%. If I'm in it for 28 days, I want to make at least a 28% return. So if we look at that, it's meeting that requirement. And at 960, you know, our probability of being in the money is about 29%, which means we've got a 71% chance of it expiring worthless, but there's almost a 59% chance that it could come back and touch that. This is probability of touching. So the reason I bring this out is we don't want to start hyperventilating if it comes down to that. Now, if we sold the 970, we get more premium, but then the probability of the trade being successful goes down. So this is a short put vertical. So we're selling a put. The goal is for it to stay above 960. So if I draw a line here, and as long as it stays above, so if it goes up, we have a winning trade. So this is our short put vertical, May 15th expiration. And I'll often put our spreads in here, 960, 955. So now we know what we're looking for when we look at this on the chart. We want it to stay above that. Okay. So, and our standard protocol with these is to say, oops, I need to make this first trigger sequence. When we've got 80% of our max gain, we want to exit the trade. So we're only going to do one of these because we're risking, you know, over $300. So 22, 24, good till canceled, confirm and send. So I guess we've officially, I guess I'll have to put this into the group later. Sometimes these stick. Okay, let's go. The group has spoken, and over 80% said take the money and run on Fly. And so what we're going to do is come back to our monitor tab. We are going to come back to our activities and positions. And because we had an OCO order here, we're just going to cancel that because we had a target and a stop. So we're just going to cancel that. Come on, fly, fly, fly away. And then we're going to come down to Fly and say, okay, we're going to take our money. We're going to right click on this and create a closing order to sell that position at the current price. Okay, let's see if we can get. So we exited a little shy of the target and we're okay with that. We're still in Microsoft and CRM and we'll look at those on Monday. Okay, and I have a reason for waiting till Monday on those. Okay, so that's Fly. Can you tell? Like I have a plan when we get in here. Okay, we've got like not quite 10 minutes left. So if we look at Citibank, so Citibank was kind of consolidating. It's like a backwards cup and handle. But you know, we've seen a lot of V-type patterns on, you know, all the major indices, right? So this is kind of along for the ride. We looked at financials and the fact that those are kind of taking off. And then this is another one of those, you know, breakout. Is it a fake out? We had a 1-day retest, bullish engulfing. So really, you know, we could have placed a trade on this. This was probably Monday, Tuesday, Wednesday. Yeah, if we had placed a trade on this Monday, why didn't I look at this Monday? You know, but we can go back in time and beat ourselves up. But we are where we are now. So it's come up, 1-day pullback, moving to the upside again. And so, you know, what do we do with that? Well, we could buy some shares of stock, you know, based on this pattern, or we could do like a Fibonacci extension, or, you know, we could do a long call vertical on this because we are bullish on it, right? So let's do a comparison with this and let's come out and look, you know, it's already traded over 5 million shares. If we did the 130 and 135, we're already over halfway through. You know, would there be enough juice for that to be worth the squeeze? It's bullish. The whole market seems to be bullish. You know, like the major indices are bullish, not the entire market because we did place a bearish trade. It's at 270. So if I took 270 and we multiply that by 1.5, we'd want to get out when it was worth $4.05. So we're going to do 2 of these. We're risking 540. We are going to right click. $5.40. Good till canceled. Confirm and send. And we're going to compare this to a stock with a target. Okay, so what's the target going to be? Well, we have a lot of choices on targets, right? So we could do a target based on the width of the range. We could do a fib target. We could do a flag target, you know, because it just moved from here to here if we wanted to have a shorter term target, right? You know, or if you said, well, it came from basically here to here. And this is where the art of technical analysis comes in. So the first thing I'm going to do is I'm going to give myself a little more room at the top. So I'm going to come down to the price axis And instead of giving us room at the bottom, which we currently don't need, let's give us some room at the top. And so if I used a Fibonacci extension and we're just basing this on this flag from here, top to bottom, we'd have a target of 139.36. You know, and you might say, well, is that enough? It's $6. You know, if you say, well, $6, is that all that in a bag of chips? Remember Max Muncy, like 3 home runs? Like that's a triple for us. You know, because if our goal is to make $200 a week, and if we made 600, that sounds like success to me. So if I took that 139.36 and I subtracted that 133.10, you know, if we could make 650 on an investment of 133.10, what is that percentage wise? Oh, 4.9%. How long are we planning on being in this? Years? No, like probably weeks. Now we could end up stopped out. That's a possibility. You know, so we have to take that into account. But we're going to make this our fib target. And we're going to make it 139.36 is going to be our target. Okay. And how many shares can we buy? Can we buy 100? Well, no, because that's 13,000. Our rule is 5,000. So you have to say, okay, 5,000 divided by 133. By the way, somebody said, like, hey, how about on Fly, the position we got out of? How about, you know, just selling a covered call? That would have been a good idea. Whoever said that, I like the way you were thinking. Now, we had 125 shares, so we could have taken profit on the 25 and then sold a covered call on the rest. Like, I really like the way you were thinking with that. So just saying. Okay, but coming back to, see, we can buy 37 shares. Okay, so it's actually not $600 we'd be making then, because if we're making $650 a share, oh, 243, well, guess it's not worth doing, right? Nah, are you kidding? That's still our weekly goal, and then some just within one trade. So we're going to go for it. Now, where might we put a stop? Well, we might say, you know, we could go just 3% below yesterday's low, or we could say, hey, we expect that this support level around 124 might hold. So 124 times 0.97, we'd put our stop at 120.28. So now we're risking more than we can make, but we're giving it more room to move, and we're still not risking more than we can afford to lose. So we're going to come to our trade tab. We're going to right click, buy custom with an OCO bracket. Before I forget and buy too big a position, we're going to make that 37 shares. And then when we come over here and put in our target, as soon as we click anywhere else on these bars, it evens up. Okay, our target was 139.36, 36, and our exit is going to be 120.28. And some of you may be kind of hyperventilating and going, well, that's a bad deal because she's risking, you know, almost double what she's planning to make. But what we don't want to do is get nicked out and then have it go up and do exactly what we wanted it to do. And so we're doing that knowingly. And with the stock position, you know, it may not work out, but this is a fib target, and we're going to compare to the long call vertical. Okay, so when there is a survey, and today I don't think there is, so you're off the hook, but one of the things that I am asked to do a lot is review what we did. So the system got us out of Apple for a gain, Dow for a loss. We chose to, you know, take the money and run on, you know, as, you know, Q, fly like an eagle on Fly. So we took our profit on Fly. We placed new positions. We did, you know, a cornucopia of vertical trades. So we did a long call vertical on FDX. We did a bearish long put vertical on Workday. we did a short put vertical, which is kind of sort of bullish on Costco. And then we did 2 trades on Citibank, ticker symbol C. We bought shares of stock with a fib target, and then we sold a long, or sorry, we bought a long call vertical, 2 bullish trades, and we'll compare those in upcoming classes. So I think we fit our 10 pounds into our 5-pound bag today. I hope your ears are not bleeding. I appreciate you being here. Would appreciate you hitting the like button if you found this content valuable. Over 100 of you weighed in on the fly trade, so I want to thank you for that. If you'd subscribe to the channel if you haven't already done that, would appreciate that. Come find me on LinkedIn. And don't forget to follow Scott and I in the land of X, Scott Thompson CS and Barb Armstrong CS. So guys, that's a wrap for today. Thank you so much for joining me. Have a really awesome weekend. Get out and hug someone you love, and stay tuned. There's lots of great content still coming your way today. Bye for now.